Alrighty, daily trading recap. It is Wednesday, the 20th of April, 2022. To Christ be the glory each and every single day, and every blessed opportunity that I have to stand in front of this computer and not wear pants for a job is pretty freaking awesome in my book. Some dollar volume before I get into the ongoings of today. NASDAQ, $254 billion volume as of an hour, 28 minutes after the close. NYSE, $320 billion volume. OTC's $1.6 billion volume of the day. Not feeling the greatest, which is a little sickness physically, but still getting through it, getting after it, putting in the screen time today. Session-wide strategy for the futures worked out well, and also the 930 strategy worked out well. In addition to that, I went ahead and stepped up my contract size on that 930 strategy to 2 contracts, looking for 2 points above there, still working out beautifully. As of right now, still fine-tuning it and treading lightly in each and every situation and each and every day that it comes about. Because, as I mentioned or alluded to a little bit in past daily trading recaps, this is just it's a weird situation because it's continuing to work, but it's the metric for which it would stop me from continuing to implement this trade would be having to take consecutive losses in a row. That's really the only way it would ever stop me out, versus comparing it to like a playbook strategy on an equity or an OTC, like a panic dip buy on an OTC. You stop trading that when it just stops showing up. Like there's different parameters that you set, and I look to identify on that chart to see, okay, yeah, that's that type of trade I want to take. I mean, we've really not had any of those in a solid amount of time. So that's the barometer for understanding, okay, that trade is just not in the current deck of cards to be able to trade, versus this type of strategy, which kind of was started and propelled itself on the fact that, hey, this is something we can do every single day. But the double-edged sword side to that is, okay, well, yeah, when is the actual turning side of that to understand, okay, this can't continue, nothing ever continues on forever. So if that time ever comes soon, could it be 10 years from now? Could it be next month? Could it be this was the last day that it happens? Just keeping that reality in my mind each and every single day as I do this, and not just being so gung-ho and balls to the wall leveraging myself with this specific strategy, but just taking the little tiny grains of salt that I can and just running and scurrying away as fast as I can and hoping to come back to the market to do the exact same thing, and watching out for that hammer as it's ready to just continue to launch itself upon me and wreck all the other small retail traders like me that are just trying to take that little nimble away. So respecting that with each and every day that I come to be able to do that. So, of course, I do like to see those numbers, those consistent numbers coming in every single day of just like, hey, we're green and it's a nice, consistent profit. But I also have to reflect on that to say, okay, the average of this strategy isn't that number. I'm not really taking home that much money that I made today. It is factoring in, hey, I've also got to make sure I'm aware that it's really only going to be on the section-wide strategy. I'm really only getting like 1 point a day, averaging itself out as I'm taking in the losses and weighing those in for the hit rate of when these strategies work there. For the 930 strategy, it's more about being ready and willing to stop doing the strategy for when and how many times I have to take consecutive losses in a row for me to really get the message that strategy is over. So that's everything in trading, right? It's not like I've mastered it in any way, shape, or form, but it's certainly, hey, this is now I've made my mistakes, my early on mistakes with this specific strategy. Now I've fine-tuned it more and more, and now we're just reaching that point of, okay, let's just continue to drive the car. We're going to hit some bumps in the road. There's going to be some potholes. We may take a wrong turn here and there, or we may find ourselves on a detour sometimes, but we're on the road and we can see what we're doing, and we've got more experience and more road behind us that's continuing to help us understand and get that experience of how to drive that car better and more efficiently. Good analogy in my book that I just made there off the top of my head. Some other notes I wrote in my journal on the day. I don't think I necessarily have the mindset to be anticipating trades from a shorts perspective. In the example of, I think just coming up in my trading career in the hot 2020 market, I was always groomed to anticipate trades based on, okay, when and where are shorts going to get squeezed. And always kind of biasing things towards the long side of, hey, these are long strategies and these are long charts. If you're looking for these specific factors and parameters, like a panic dip buy, for instance, or a breakout trade, blah, 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 take your pick on all those, and identifying points at which shorts are more likely to get squeezed, but not so much really on the side of, okay, hey, where are longs trapped? And, I can't say that I haven't completely done that, whether it's a first red day, again, take your pick of different short strategies there, but I still feel I definitely have more of a bias, and just me having that self-awareness today to open myself up to the idea that, hey, I don't really ever think of that. And I think it was CASA mainly that I'll get into as the first ticker that was kind of that, man, I don't really ever think of or place myself in the shoes of how I normally would trade it as a long, anticipating a long approach, versus now thinking about it from the other side of anticipating and waiting for a certain price action to confirm itself from a short position. So just opening myself up, always taking in and understanding it's not about news, it's not about volume, it's not about anything else. It is about what are the perspectives that are out there. I always go back to the Chris, I forget his last name, from the St. Lucie Masterworks course of Chris Cady, I think was his name, of the perspective of that quote of, if you show a ballpoint pen to me, I'm going to say, hey, that's a ballpoint pen, it's meant for writing. If you show it to somebody else, they're going to say, oh, it's a ballpoint pen, it's meant for writing. If you show it to a dog's going to say, oh, it's a chew toy. Well, who's correct? Everybody is correct, right? It is whatever you make it or whatever your perspective is, but that doesn't mean that it isn't something else to somebody else. So the same thing applies with every and any ticker and chart of, somebody can certainly look at it one way and somebody can certainly look at it an entirely different way, and they both can be correct in the same light, but it's about bringing in all that basket of goodness to understand that it's not what you think it is what the market says it is. So carrying that weight within, just continuing to remove myself and my own perspective and bias from the equation when I trade, and just trading on what the basket of human emotion is that's caught up in the price action there. Also was thinking that, the thought was there of, hey, it's Wednesday. It could be a nice little opportunity for some more morning dumps trades. I should try to get up early to see if I can capitalize on those ones. It would be 4 a.m. here in our Mountain Standard Time compared to the 3-hour difference for the Eastern Standard Time. I'm looking for that 7 a.m. news spike press release to be able to spike the thing up and then just immediately drop it down. That is the morning dump strategy setup, but also kind of figuring in that I was sick, so I did definitely want to sleep in a little bit more, get some more rest just for health, physically wise. But then also thinking, gosh, yeah, I do feel there is some, with having AYTU and PMCB yesterday working out so well, there could be some bias there to trap in more shorts trying to play off of that exact same trade. I feel like it rarely ever happens that the day after a very, very nice and beautiful chart happens. Of course, AYTU and PMCB weren't the most beautiful hogs, not like they were just popping up on everybody's radar with the most amount of volume, most amount of percentage points offered. But when the two very similar and distinct patterns reveal themselves, I do feel there are times when people are absolutely going to be looking for that same type of thing in the next one, the next day. Of course, like we're looking for the example of, hey, what's going to be the next VERU? What's going to be the next GameStop? What's going to be the next? Everybody's looking for the next one. And rarely does it ever happen immediately after what just happened, or even relatively in the same type of exact price action way or movement that thing happened. It could certainly happen maybe down the line in a similar type of fashion, but rarely ever, like the example of history doesn't repeat itself, but it rhymes. I think that's a quote. Yeah. Tim Bowen loves to use that one. But just keeping that perspective in mind and saying, I think it did prove itself today that there really wasn't any huge or key offerings like that. I think different ticker that I'm thinking of, but did offer one type of morning dump that was earlier in the morning. But yeah, really not just a huge offering of those today. But that is trading. It's not going to happen every single day just because I want it to. It's got to be a sniper, ready to go position, ready to strike when it shows that it is there. So that is that trade specifically as well, just waiting extremely patiently, ready to go, and being ready to capitalize when the moment comes, and not just striking too early, not being too eager in it, because that's when it gets very screwy and super off leveraged risk reward that way, but continuing to get the grind after that in that regard for that specific setup. I also run my journal today to just continue this introduction of maybe implementing some of the step away or just set and forget it strategy. I was looking at potentially shorten 1 or 2 MES contracts here as SPY was breaking this little relative low in the morning. I really want to get away from trying to take a more full intraday position still within the first 15 minutes of market open. I still feel that there's plenty of time for this thing to just continue to bounce around and just screw around with different positions while it's still so close to market open. But sure enough, that even though I did not take that one trade, it worked perfectly immediately after my entry, and beautiful. I want to say even like 20 points that ended up dropping from when I was looking there, maybe 4474-ish. I'm taking it to 446, 14, 15 points around there, at least 10 points that I can say of opportunity that, I can say that I missed, but in the same light of how many times have I done that before of selling at the bottom and that just being a fake out for longs to collect those stops, and then it just quickly reverses and then spikes back to a new high of day and just continues to play games that way. So that's one of those trades again, and then I'll allude to on CRXT of the same thing that, gosh, I don't want to chase, and it kind of forces me at times to not take a trade, but that is, I feel, my development in a trader of not succumbing to the FOMO, because I feel more times than not, it just becomes a fake out. I want to say, what just came to my mind of, I definitely don't want to be, even though it might be a great, awesome trade, and there's still plenty of profit opportunity behind my entry, even if it is a little bit of a chasey entry, I do not want to be entering a trade on the basis of a faulty premise or just a very lackluster entry in regards to my mindset of how I enter that trade. Not just so FOMO of like, oh shoot, there goes my train, I need to go catch it, I need to climb on the back of it, versus being well prepared at the station, ready to go and enter the train at a normal leisure pace and then have it take off and be a part of the whole move and be present within it, versus trying to get on the train, trying to be a part of, okay, what's going on? What's my stop here? Oh, I need to get it. And immediately from the get-go, starting at such a disadvantage of a position mentally, it's more worthwhile to me to miss that opportunity than to be ready for the next one, because there's going to be a next one at some point, and being well prepared for it and established mentally to then better prepare myself for the exit on the backside there. So lots of journal entry notes there in my introduction today, but I'll get right into it. For starting off with CASA, I tried to take this one for a little third day surge play. As soon as it's very small position size, 120, 150 buck position size in total, around there, only 20 shares that I took on it. As soon as I started in with that first 10 shares, I really knew that it was just like, it hit me of, oh man, there is just zero volume on this. This is just not looking very promising for probability of this happening today. But it was on the volume profile level. I mean, we were right at that key barometer or metric for determining, hey, this is potentially an opportunity for us to start spiking to some levels. Even if volume doesn't come in, we could start to ride on the top of that volume profile wave, or just the collection of where everybody is stuck. And I want to allude to also, I don't know if I want to talk about it with something else, but I'll get into it here, of watching some recent Tim Grattani video with Huddy and Dom of how Grattani's looking more at anchored VWAP level. So that's a very interesting metric that I could start to dive into more as well. I could see myself doing that, and it certainly makes a lot of sense as more of a fine-tuned niche tool as compared to like just a volume profile, whereas anchored VWAP takes into consideration the very first green day, or just huge volume day, huge down day, and anchoring VWAP from that point, and then looking at that as a gauge for, hey, where is our average short at? Hey, where is our average long at? And using that specific price level instead of just kind of a range of volume in the volume profile metric, to then say, okay, if we start to reach to this point and then start to get above there or below there, vice versa, whatever, we know that shorts are going to start to be underwater or red in their P&L, or vice versa. It's going to be longs for whichever setup it is. So I could see myself certainly, I didn't know Tim Grattani was still exploring it himself. I could certainly see myself maybe attaching that to more specific trades or more of third day surge style of trades, to see if there's any key price level to be mindful of. If we get like a little tap above there, to be then shorting into, to see, okay, wow, we did hike above there, but there was certainly a lot of overhead, just to see if there's any key price levels to be mindful of as another level on top of any volume profiling that we can see through the scans platform there. So this specific trade, only 20 shares in size. I wanted to say that I definitely did view this one from the perspective of, hey, I want to be taking 100 shares on this for a full position size if it was going to start testing that $7 level, break to the new highs there from that first green day, 706-ish, and get some ramping up. We do want to see 7.4 for the low floaterness. This one is 30 million float, not crazy low float, but for the capabilities that it showed on that first screen day, hey, we could certainly see some opportunity potential if the volume was there. But that's just the key in all of it. It's got to be the volume. And, of course, price is always going to be king, but on these specific strategies too, I do feel for how many times I have taken a loss on these ones and respected that risk level, it's just got to have that volume. And it can't just be, I've bought the top on the little morning spikes so many times. It can't just be price action either. It's got to be a representation in that level 2 and time sales that something is actually stirring underneath the surface and going to be setting this chart up for something at a much higher price later in the day. So thought I was reading that with another 10 share entry buy at this little, if we take away the scale on this log here from that big dumping red candle, I mean, just put it in decent, I even look back at it now and I want to say decent volume, but 80,000 shares. I mean, it's not monumental, but it was still decent price action. I thought at that time of, hey, we're still not like nothingness for volume, but it still wasn't that great of a representation for volume either. So, but still at this point, keeping in the back of my mind of, hey, if this trade is going to work, I want to be taking like minimum of 100 share position size. So these are still very preliminary entry trades just to protect that little bit of FOMO to say, hey, I'm establishing a position. If we start to break above 6.7 and we start to hold these levels 6.8, 6.9, I've already got a position established, and I can just continue to very finely tune press for, hey, let's see if we can identify a little dip area to then size in more to a full position size. And I can be very lenient knowing that I already have a position in this to play the move, which then allows me and frees up my mind to then go after hard hey, let's find the bottom of a little tiny dip or pullback to then play for the higher move there forward. But just didn't happen. And you could certainly see the volume caved in on a lot of longs that were also thinking that same thesis that just got me out at low of day there. I was initially thinking of risking that $6 level with that first 10 shares of saying, hey, I'm willing to take $6 loss around this range of 60 cents, taking it down to $6 there on my 10 shares, just to give it plenty of room to do that little fake out. And that's where that really volume profile totally dropped off there as well, knowing that the trade sentiment would definitely be over if we broke that level. But as I got that 20 shares saying, okay, the trade is developed to, I want the trade to immediately happen from here. We need to be breaking the high of day. Okay, shoot, we get in that next minute candle. It's not happening. Break. Definitely adjusting my risk to low of day there and taking that loss. I'm very glad I didn't take more slippage. Only got a cent off the bottom there for my stop. So taking that for what it's worth. But yeah, just taking that little loss there and moving on to the next one. IO was another one I traded. Definitely wanted to look at this one for the dip and run, but this was the highest percent gainer on the scanner list for today of what I would consider the first screen day movers of appropriate dollar volume size and movement. Former runner, I also tried to look up this one on the 18th of October here for 2021 for whatever news catalyst on this day was, but similar type of, not even like a similar type of price action, but of, hey, first screen day, similar type of thing. What can we learn from this type of characteristic that was happening today to be able to potentially apply that to a similar type of characteristic for price action today? Not that we're looking for the same type of pattern, but can we learn anything from how this thing moves and apply that to maybe playing a dip and rip trade or just any type of trade for today? I feel like I was seeing a lot of, within this first pullback out of the gate on this specific day, okay, hey, it's kind of a little sketchy. It can kind of be fake out after fake out, and then have another move. Okay, we can kind of see it looks pretty blocky in how it prints, but sometimes it may end up holding after it's already shaken out. It may actually form some key levels and then offer a trade that doesn't look the most glamorous or beautiful, but can certainly still offer something later in the day. So that doesn't really give us a huge indicator of what we could think happens today, especially as it's not anywhere near the same chart for today. But we can keep in the back of our mind that it's a manipulated stock. It is just sketchiness all over the place. They got a buttload of dilution. They got a shelf, an ATM pending S1 offering. They're negative on their cash flow. They're just ready to be absolutely dicked upon. Also, a decent amount of short interest in this one. 22% of the float, I think it was showing there on scans. But just keeping that in mind and understanding that it could be just little fake outs after fake outs on this one and respecting that. But established my trade I know I wanted to take. I was already going after the calculator on my little trading thing of put in how many shares I wanted to go after for what specific dollar volume I wanted to go at this with, and saying, okay, yeah, do I want to take like 1,000 shares? Nah, I don't really want to go there. Well, with this first preliminary trade, I said, okay, yeah, I'd like to be potentially around that $500 or 500 share mark to be taking a trade, like a dip and rip maybe, or even if it's showing more strength or more substance as a dip and rip bottom, I could certainly see myself sizing up more off of that 500 share base. But as it started to build, we got a little rejected in that first minute candle, break to new high off of this second minute candle. Okay, volume's coming in, looking very decent. I think I could take a little stab here. I'm not going to take that full position size because it wasn't the trade I was anticipating in pre-market coming into market hours, but I'll still throw 250 shares at it. Sure enough, price continues to work from there. We attract in more volume, a little tiny pullback or just kind of sorting itself out in that next minute candle. Finally get to push to a new elevated breakout to high of day there, was selling into that 82 high for that first. I thought 175 was half of 250. So I sold 175 shares thinking that was half into that first little breakout, anticipating, hey, let's look for that 86 high breakout as well to potentially be selling a little bit more into that and then just playing the rest as a lottery ticket to see if it would go crazy. But sure enough, it rejected on there and sold the remaining 75 shares as it broke this little 76 bottom for that specific trade, looking for the move and continuation within that first initial push out of the gate. Secondly, then I evaluated, okay, they had that little push, pullback, but we're still above lows. We're still now also clinging to VWAP there. Now I've kind of shifted my mindset to a different style of trade of, we can see we're putting in within these 3-minute candles. Let's see how I like this perspective. We can do that. Okay, now with these 3-minute candles, I feel like it's a little bit of a wedge here. Now we're clinging to VWAP pretty nicely. We've just had little tiny shakeout, little tiny scariness. Maybe this is a holding level to then test back to that 80-cent level, and then we can potentially start to build some more if we start to hold VWAP again continually, and then we break above 85, whether within the next 10 to 15 minutes after this little, what I consider a consolidation above lows there, and especially right around VWAP. So taking in, sizing in with what I considered the full position size that I wanted to take of 500 shares there, using that little bottom low, super tight low risk of 75 as the risk level there. I wanted to be filled exactly at 75 as it was pulling perfectly there, but I just barely missed it. So I had to get filled at another thousandth of a penny. I think that's a thousandth of a penny. 759 instead of directly at 75 to be able to use that as a risk. So of course ended up cutting there, and then sure enough, it just started to pick up steam, which I potentially, as I had already gotten out, I knew that potentially would have happened of. Now there's just so many key risk levels that it can easily start to pick up more and more longs stops along the way and just become a snowball as it avalanches down. So it was that low, then it was this relative low at 75, then it was the low of day at 72 here, and then it just totally died off for that initial morning session, and totally a pooper on that one. So ended up a very small negative on this one because even though my loss was 1.7%, it was double the shares that I had on my win of 3.2%. So certainly not boasting about any of it, of the winner or just even the loser in itself, but that is just a great example of trading that. I can have double the percent of my winner as what my losses are, but it's just about that position sizing as well. That is just a total another baked potato to this example, to this trading regime that you have to factor in, and it's a whole nother piece of the puzzle as well. I think that's the example analogy I was looking for there. But that was IO. Now I want to get into ALVR. I took a stab in short on this one, paper short, just for another first green day mover. For shits and giggles, threw a short at it as it ran into this little halt. It had the fake out, very nice fake out, long stop collection, immediately resort to price action back above VWAP, then started to press the highs again, and immediately very nice price movement there that I miss as a long. Only really reflected on, or kind of saw that perspective after watching Bryce 2 in the small cap recap. But after seeing that, just kind of wanted to have a short bias for some reason, said, hey, I'm here for it. And, very unlikely that I would actually have ever gotten filled at that 782, whatever it did halt at there for the high on this candle. Yeah, 782. For how it was printing there, if I would have actually gotten filled at that price, but saying, hey, it's paper short for some reason. why not? Let's do it. So it did have just its little big volume surge immediately after it opened after that halt. And then that was the price action I want to see, of not continuation for where my short position was, for how lack of preparation for how many times I've not done this type of trade of getting short into a halt, but of not continuing the spike after that, which would have obviously produced another halt, in my opinion, if that many shorts were stuck or trying to get themselves out and producing more and more buying pressure on this one. And that would have obviously screwed me over and been a terrible trade, but sure enough, it worked out pretty decently, and I was looking for maybe 735 to then start scaling out, just looking for a little bounce off of VWAP. Not anything crazy. The risk reward on this trade was absolutely horrific. It wasn't really factored in when I took the trade initially, getting short into a halt, but it was just about playing price action, of being a part of this so that I could have an involvement in it more and watch that level 2 time and sales more, and just have an understanding for, okay, this is why shorts are trapped. Now I can have the understanding and feeling, because I would never do that normally, but now I can understand, okay, yeah, I'm definitely underwater here and I want to get out as fast as possible, and understanding that emotional aspect of it for future trades down the road, and just using it as an educational experience. So I wanted to get out at 735, had to step it up for like half of my exit at 737-ish for that perfect little bottom that it ended up being there. Spikes a new high off of bigger volume, but that again becomes another fake out in itself. And for me, it's just the weirdest thing of like pretending to watch myself as that specific candle is happening. This 959 candle is happening, because I know that it's bad. Like, this is just absolutely terrible price action to be watching. And I know what's happening. It's like, I should be covering right now. And it's just every ounce inside me, even though it is a paper, even though it's still half of my original position size. And for what position size I would be taking on this one, maybe it would be even less by that point, but that's besides the point. Of like, it just goes against every fiber of what I feel like I've known to be fundamentally as a Tim Sykes prodigy, I guess, of that total basis of, hey, cut losses quickly, you stick to. This obviously is a totally different trade idea than what you thought, for whatever you thought the initial trade idea was, getting short into a halt. But yeah, it was just invigorating. It was choosing, that is one of my rules, is choosing curiosity over anxiety. And that paper trading totally allows me to do that, to say, it feels naughty to be doing this right now, to be letting it spike against me like this. It could absolutely and so easily just start to continue ripping to $10, $12. You could just go absolutely berserk like CRXT did today. But sure enough, holding through, I know how many times these are going to not work out like this, like it worked out today, but for the examples and times that it does, being a part of it, I think, is absolutely key to then understanding, okay, why did this one then specifically work out this way today, and offer me a chance to not only exit near a similar price that I exited for my first half of a position, but exit even into very nice strength as it continues to sink off, to tail off for more downside on that backside move there. So a very great example on that one today of, thinking that I wanted to do something just educationally with this trade through the paper aspect, and then gleaning something totally different education-wise from it. It's all I'm here for. I'm here in front of the screens to be taught by the market. I'm not trying to take money away with these paper trades, but I'm looking to learn and glean anything that I can to be able to apply that to future trades in my later trading career, to be able to understand that, like, I recognize that, and I'm not afraid of that anymore because of how many times I've already done that. In the same light, I totally think of now for how many big losses I've taken with this future strategy, this automated algorithmic strategy that has to allow a lot of room for big losses on the losing days when it doesn't happen. For how many times I've taken those now, big losses like have zero effect on me, and zero care. And I can even feel myself now as it's happening every single day, that these, I don't go to my NinjaTrader window like in a fever or just like in euphoria saying, oh, did I get my profit today? Did it hit my 10-point profit target? It's just like, oh, did it happen or did it not happen? Where am I sitting? Okay, well, it was a losing day. Oh, okay, well, it was a winning day. Just coming at it with zero emotion anymore, because it shouldn't be emotional. It is what the trade is, and it shouldn't be attached to my ego anymore. I think that's when I get so caught up, and that's what my number one rule is detach the trade from your ego. And the really only way that emotion becomes involved is when it is attached to my ego, because then it validates, if I take a winning trade, then it validates, oh, I am a good trader. If I'm taking a losing trade and it's a big loss, then that's somehow saying that I'm a bad trader. When in reality, it's one trade doesn't define me. It's just the collection of my trading career. It's just about the P&L. It doesn't matter about how good a trade looked or what one bad trade was, what one good trade was. It always comes back to that P&L, and that one trade doesn't make me. One trade can certainly ruin me, and that is what I'm keeping in the front of my mind always and forever, that I'm not going to make my trading career by one trade, but I can certainly end it by one trade. Keeping that respect and keeping that in the forefront of my mind has been key, and just slowly been a process of developing that more and more. So extremely thankful for that one. CRXT, I'll finally finish off with here. Missed it by a few cents. Was just totally unwilling. A beautiful, I'll get into the breakdown of the chart here. Beautiful, if we could take out the move here, hold above this 1.7 level, which was that high on that first screen day. And kind of, I want to say it was a little bit of a base, or provided some amount of substance in this volume for where it peaked yesterday around this close. Just this little collection of volume, not anything hard or technically analyzed there, but specifically based off of that market hours high on that first screen day that we were holding above there, putting in a very beautiful bottom. Chris mentioned it as a like hard and choppy little bottom to be a part of, but I was totally there and watching it and saying, okay, if this starts to hold, I could definitely see myself sizing into this. It's not a first screen day type of dip and rip bottom that I'm looking for, that I feel I've kind of wrongly picked or justified just because it's something that I want to look for. But for this one, where it is, hey, this one has been on a lot of people's radar for a lot of days, and this is a very key level of that first screen day, a very notable high of day. So the weight of this bottoming or double bottoming level could have much more impact than just what randomly I feel like I'm picking out, or just in the 1 or 2 minute candles that I'm saying, oh, it's finding a bottom there, let's lay off of that. I'm like, no, this is developing certainly a lot more substantially than what those are, and not really adjusting to that at a quicker pace, or not really realizing that at a quicker pace. I was just unwilling within this 10:07, 10:08 time frame. After we started to break above that little 179 little tiny range at the bottom here, I was just unwilling to chase it. I said, gosh, okay, I think I missed it. And within this candle, I was saying, okay, if we pull back to 175, I think I could see myself maybe getting a position there, starting in a lot harder. But if it did start to pull all the way back to 175, would that cut back the probability of the trade still happening to the upside? So would it make me feel confident in selecting a trade there? But it's just a lot of get out of your own way with a lot of these trades and just let it ride. Certainly, if I had been in this trade, I would have been out pretty much 100% guaranteed by that $2 mark. I know for certain that I was still playing it as if I had a position and saying, okay, saying as to have a position from 175. Okay, we're kind of getting little rejecty, little doji here at VWAP, and also where it kind of topped there at VWAP as well at 952 candle here. I would maybe have started to take off some at that point. Okay, we're still holding decently well. Okay, we finally got taps to $2 here. Okay, we got the push through to $2. Okay, now it's rejecting off of there. That was the point of, I knew that I would have been taking a lot off of my total position, if not the entire thing. But sure enough, it just continued to rip and rip and rip and go all the way to just under $4 there. Another 100% after where I would have totally been out. Somebody was totally underwater on this one. And I love to see this little super parabolic move, kind of rejection hard off there, and then perfect little barely tap above that previous high of day mark, and then that was going to be the top key in there for a hard downside move there, a perfect V, perfect almost symmetrical reverse parabolic move there for the downside just before, right in that lunch afternoon session there. So very interesting price action on that one, and very awesome moves to pretend to be a part of. And yeah, this what I was reading in my book in the Unknown Market Wizards book today, the unknown one. There's one guy in there of how he was talking about he's trading at a prop firm, and how he would just totally berate himself a lot of the time because he would miss some trades, and of course all the other guys around him would be a part of it and just make an absolute slam dunk and just be high-fiving and having awesome P&L days where he has got to fight that FOMO, not only just of missing out on that money itself, but then being a part of that revelry. And all these other guys are doing so much better than he is, and blah, 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 all these different things, thinking he's a bad trader. You know, I feel like there's a good and a bad side to that for me, that I don't have that. Because then it could totally just be so easily slapped in my face of, oh, look at, I even chased it up another all the way under $2 and still made over 100% or just under 100% on this trade. Whereas I was unwilling to start chasing it even after it broke above that 179, 180 level, and just said, gosh, yeah, I didn't get the entry that I wanted. I kind of missed the bus terminal. I was waiting a little bit too long. I think I pulled this one up barely within this last little bit of that range-bound bottom there. And just said, okay, yeah, I wasn't able to get the position that I want. I'm just unwilling to waver from me chasing a position and, like I mentioned in the introduction, enter a trade from a sloppy mental perspective already that way. So even though, yeah, I missed a beautiful P&L opportunity from still chasing an entry point, I still feel this sets me up better in the future of being very disciplined and respective of, if I don't get the entry price that I want, then I don't want to be a part of it. The value that carries of being in a trade from such a balanced mental perspective is so much more tangible and valuable than really I feel any monetary gain from these types of trades could be. And I say that, of course, not having any huge monetary gain from these types of charts and saying, okay, well, yeah, I actually, now seeing the monetary gain, I do value that one more over the mental aspect of it. But no, I totally do feel that there's going to be more charts like this. And I was here for it. I was totally aware of it and understanding, hey, I'm seeing these types of price levels. I could see this type of move coming from here. I certainly didn't expect that crazy of a move to the upside, but I was there for the move. It was just that respect of discipline of what I was holding myself accountable to, and that was it. There's going to be a next one, and this is just another building block in this entire trading career that is just going to set me up continually for the next trade, and that's what it all boils down to. That's what it is always going to be about. So that is all I had on the day, with a little bit longer daily trading recap today. Of course, on the sore throat, that's not going to be fun going into tomorrow, but we're dealing with it, and extremely thankful for every opportunity, and we are thankful for each and every single one of you guys. We will catch you guys on the next one.